Hi there. My name is Nick Nash. I'm one of the 6 co-founders of Asia Partners. And on behalf of our entire firm, it's my pleasure to share with you the summary of our 2022 Southeast Asia Internet Report. Before we start talking about technology and the next 10 years ahead, and the many reasons why we feel great optimism, I do want to reiterate that although those are important topics, the much more important set of considerations today remains the ongoing tragedy of the COVID-19 pandemic. We want to share our deepest condolences with everyone who has lost loved ones, friends, and colleagues. And at the same time, share our deepest gratitude to all the many, many healthcare professionals around the world and here in Southeast Asia who have worked so tirelessly and sacrificed so much throughout the crisis to keep us safe. Thank you. We began a journey of creating annual reports, if you will, of the state of the Southeast Asia tech ecosystem back in 2019 when we organized and codified a set of beliefs and even forecasts that had been swirling around inside of Asia Partners and with our limited partners in our dialogues with them. We made 8 numerical and specific predictions for the next 10 years, meaning 2019 to 2029. A year later, give or take, in February 2021, we shared our 2021 report in the middle of the COVID pandemic. We titled that Resilience and Recovery, a nod and a show of respect to the incredible work that not just the economy as a whole, but the entire community of professionals in healthcare, in the nonprofit sector, and government were doing to keep the entire region and the world more broadly safe and on the path to recovery. We began our 2021 report by holding ourselves accountable on our 2019 predictions, and then we added a set of new ideas, what we called the rule of 25, around when companies should think about going public, the cargo and the rails, a interesting study of how emerging market tech ecosystems have historically tended to evolve. And then finally, an important deep dive on what was going on with COVID-19 in Southeast Asia during 2020 and early 21, and how various industries were rising to the occasion to be part of the solution, whether it be in edtech, travel, the auto industry, or the healthcare industry. Today, in our season 3, if you will, we'll be sharing the beta edition of our 2022 report. Just as before, we'll be holding ourselves accountable to our original 2019 predictions. We're now about 2 years in. We'll also give an update on one of the core predictions that we discussed in 2019, the Series C and D gap, and how that's a bit of a nuanced story today. Very much still a gap, but an interesting dichotomy has developed between Indonesia and the rest of Southeast Asia, ex-Indonesia. And then we'll finally share 2 other sections, an interesting comparison reminiscent of the cargo and the rails last year around how tech market cap tends to evolve over different countries at different stages of economic development, and a very concrete prediction for what might happen in Southeast Asia for the next 10 years, from 2021 up through 2031. As you may recall from 2019, we had 8 core projections. The concept of Southeast Asia entering a golden age of rising affluence, which would in turn create very large technology companies. We'll revisit that. The concept of home court advantage across our region, which would confer a unique set of benefits, not regulatory or not legislative in nature, but authentically geographically local to our companies, and create a degree of local insulation, as my co-founder Oliver so wonderfully says. We predicted 20 more billion-dollar tech companies from Southeast Asia by 2029. We got that sort of wrong, and then it's happened sooner than 2029. It's happened a lot sooner than we had expected. We've said that at least half of those companies would pursue IPOs. That one's very much on track. In fact, there may be more than 10 that go public over the coming 10 years. We predicted that there would be at least an additional 400 billion US dollars of incremental equity value creation from existing companies and new platforms over the next 10 years. We're about halfway there, just 2 years into the 10-year forecast. We thought 70% of the winners would be regional and about 30% would be single country focused, specifically around Indonesia. That looks very much intact. If anything, there may be another way to build single country players, certainly in Vietnam and perhaps even over time in Thailand and the Philippines. we had identified about 28,000 alumni or graduates of the first generation of companies back in 2019. And about 1,200 of them had already gone on to become founders of companies, next generation companies in our region, much like the talent recycling that takes place in Silicon Valley and other ecosystems. Turns out we weren't looking hard enough. There are actually close to 9,000 next generation founders if we include a broader set of academy companies, most notably some of the more traditional technology businesses, which were the only game in town back before 2009, when C was founded, in 2012, when Grab was founded. And finally, a prediction that we've gotten right, but in some ways didn't want to get right. There remains an acute Series C and D gap in Southeast Asia, geographically targeted more on a regional basis than on an Indonesia basis. And we'll tell you a bit more about how those dynamics are playing out, both in Southeast Asia and vis-a-vis our neighbors to the north in China and to the west in India. With that, let's jump into each of the 8 and take you through a little bit of more granularity on what we got right and what we got wrong. We'll start with the golden age concept. As you can see from this chart, Southeast Asia is squarely in a band of affluence between roughly 3,500 US dollars to about 7,000 US dollars. Now, mind you, that's not per month, that's per year. These wages, these levels of affluence are in some cases an order of magnitude below what is typically common in many Western countries. But that is still very, very powerful. First of all, because it's greater than what we've been in the past, but as importantly, it is a unique band of affluence that has been correlated to the creation of what ultimately become very large companies. We'll tell you about this on the next page. When China was in its golden age band of affluence, let's call it roughly 2004 to 14, plus or minus a year, a number of companies in the technology industry went public. And those companies today account for roughly 53% of China's tech market cap. That is really interesting in our eyes. Now, that might just be a one-off individual country data point. It may not be indicative of something broader. But when you think about Korea today, well, the tech companies that went public in Korea's golden age, again, 1975 to 86 plus or minus a year, are 52% of today's current tech market cap. That starts to tell us that there's a pattern here. We even looked at Japan, and although Japan has left its golden age since 1960, it's almost 60 plus years past that point. Nonetheless, the echo of that golden age in Japan's case remains about a third of their tech market cap today, which is really remarkable, which is why we're really focused on figuring out what drives these dynamics. The more we look at it, it's the combination of several factors, the most important of which is ultimately disposable income, discretionary disposable income. It's in this period of time that affluence is, of course, rising. That's by definition. But to a certain extent, wants haven't yet become needs. What we actually find is that after you get past this blue zone, you tend to find that actually truly disposable discretionary income tends to peak and fall off after a little bit. This is the time when affluence is rising at such an interesting level in terms of percentage terms that it permits the creation of entirely new, very innovative technology companies. Now, technology today includes mobile and VR and a whole bunch of other interesting next generation areas. Technology in China's case, of course, was Web 1.0, the large horizontal web platforms that, of course, embraced mobile over time. Technology in Korea's case was more VCRs and consumer electronics. But the point remains, every part of Asia experiences its own golden age at some point in time. And it's the alumni, the children of the golden age, that go on to do great things. And we feel so fortunate that in our case, Southeast Asia will remain in the golden age for many years to come. In fact, it won't be probably until give or take 2030 or so that we'll have emerged from the golden age as a region. And by the way, just around that time is when India will be entering the golden age and create a tremendous amount of shareholder value and new companies at that moment in time. So that's prediction number 1. So far, so good. That one seems to be relatively intact. Recent blips and bumps in terms of affluence, COVID notwithstanding, but the overall thesis is intact. The second prediction we made was around home court advantage. Any sports fan knows exactly what we're talking about. When your team is playing in its home stadium, there's just something magical about the way that they play. This manifests in business as well. And we've always thought of all the world's technology companies as living on one of 3 essential branches of a bonsai tree. Branch number one is what we know and love. These are the world's largest internet companies. They have network effects or two-sided marketplace platform dynamics, and those effects are global. And what is remarkable about being a global network effects business is that when you're in different parts of the world, you're the winner. The Google of Thailand is, no surprise, Google. The Facebook of Indonesia is Facebook. And that's mirrored by its doppelganger in some ways, which are what we sort of call the unique local winners. These tend by and large to take place in China and Russia because of the unique political systems over there and the legislative restrictions that certain global companies face. Baidu, in many ways, is a product of a very unique sort of circumstances. Yandex in Russia, Vkontakte, which is in many ways the Facebook of Russia. Many people in the West think a lot about category two, and they think that that's sort of the only game in town when it comes to the internet. There's really the global network effects category ones, and there's a handful of these category twos. And I think one of the most canonical pillar, sort of observations, beliefs, core values that we have at Asia Partners is that there is a third way. And that's branch three, what we call local network effects businesses. And these are businesses that draw upon the same economic models that a category one draws upon. The idea of a network effect, the idea of two-sided marketplace, circular economies, virtuous cycles, if you will. But they tend to have a radius that confers strength within a region or on a multi-region basis, as opposed to a planetary basis. A great example would be the Taobao business within Alibaba. Alibaba, of course, was owned by a Japanese conglomerate and by an American conglomerate, SoftBank and Yahoo, yet succeeded magnificently in China. My co-founder Oliver saw this firsthand when he was at eBay and saw the rise of Alibaba's Taobao business in years past. Sea has built a terrific business in e-commerce and games in Southeast Asia, has now expanded its games business into India, its e-commerce business into Latin America, as well as games, and is going multi-local over time. It's a great example of a category three business, perhaps even one that's migrating into category one status. Grab, Gojek, Mercado Libre, Tokopedia, so many other good examples of this around the world. And when you think about what is it that drives a local network effects business, well, we'll talk a bit more about that today. And those factors that come together to permit a business to be a Cat 3 business versus a Cat 1 business tend to coalesce or conspire to create a new one of these models roughly every 12 to 18 months. In fact, here's a little bit of a walk down memory lane. What you can see in many, many cases is that the global inspiration for this model is often from America, increasingly from China or even Japan. Southeast Asia certainly doesn't have a monopoly on the origination of these ideas. But the local winner in that category, in that model, is often a local girl or a local boy. And that's a great source of pride for Southeast Asia, but there are some very clear reasons behind that, which we'll talk about in a moment. Our own investing effort at Asia Partners, as you can see from the blue highlighted cells, is very much aligned with this thesis. In fact, each of our first 6 investments and our fund zero, if you will, which is of course our early investment in C, and then my role and Brooks' role and Oliver's role as one of our shareholders at Sea, in many, many ways mirrors this theme of going after category 3 bonsai businesses. Now, why do category 3s exist? And frankly, this is a topic that in some ways perplexes the Silicon Valley and Seattle crowd because they're used to winning everywhere in the world. And when they don't win, they sort of wonder, well, was it something that they did? Was it a lack of capital? Was it a lack of focus? And while it's certainly the case that many factors dictate whether it's a local winner or a global winner, we would argue that there are some very structural factors at work, channeling our inner Jared Diamonds, so to speak, in terms of the role of geography and the role of different levels of affluence. Let's start with geography. One of the things that's just completely apparent when you look at Indonesia from the air, you look at America from the air, is how different the geographies are. Indonesia has at low tide about 17,000 islands. America is a proudly terrestrial nation with highways and railroads and flight networks and pipelines that crisscross the entire continent. From a land perspective, this has very important implications. Think of it this way, in a very simple sort of way. On a scale from 1 to 5, how important is what's called multimodal distribution, highway and rail, trucks and railroads? On a scale from 1 to 5, how important is the water-based logistics network? 5 the top, 1 the least, or 0 the least. America strikes us as a 5, 2 kind of country. Very, very reliant on road and rail, not terribly reliant, Huck Finn and Tom Sawyer notwithstanding, going down the Mississippi River. And what you see in Southeast Asia is literally the mirror inverse. Southeast Asia is a 2,5 kind of market. And you see that in all sorts of ways. For example, if you look at container ports, 8 of the world's 35 largest container ports by volume, by TEUs, are in Southeast Asia. Only 3 of them are in the US, which, by the way, may have something to do with the fact that the supply chain is kind of gnarled up right now in the US. But 8 of them are in Southeast Asia. On the flip side of that, the US has 14 times as much highway as Southeast Asia does, and about 5 times as much railroad as Southeast Asia does. That tells you a lot about how logistics will be handled differently in these parts of the world. And it requires not just a different mindset, but different IT systems, different partner and ecosystem vendor networks, different approaches to warehousing and logistics, and even different approaches to how you engage with the customer on the ground. And that prediction feeds into the third prediction, which was back in 2019, we thought there would be at least 20 more billion-dollar tech companies emerge from Southeast Asia. We're proud to tell you that we sort of got this one wrong, at least in the near term. There are today, by some estimates, approaching 40 so-called unicorns. It's a term we're not very fond of. So-called billion-dollar tech companies here in Southeast Asia. Some are terrific. Others perhaps will face more hardship or more volatility as markets perhaps get a bit less frothy. But nonetheless, the ecosystem is moving in a very constructive and positive direction. And we would absolutely tell you that while markets will go up and markets will go down, and perhaps there won't be quite as many this time next year, the number of great companies, well-run, thoughtful, disciplined companies coming out of this region continues to grow every year. We're pretty confident that there'll be far more than 20 more billion-dollar tech companies than there were in 2019 by the time 2029 eventually rolls around. Likewise, we felt that about half of those 20 companies, perhaps another 10 or so, would go public. And that's actually off to an excellent start. Sea's IPO in 2017 in some ways laid the foundation for a new generation. Grab, de-SPACing, in the end part of 2021. Another company from Singapore has already gone public on the New York Stock Exchange just months ago, and there are several more in the wings. A prediction back in 2019 that seemed borderline optimistic is now probably going to be a bit of a ho-hum prediction by the time 2029 turns around. That also ties into prediction number 5. We estimated there would be an additional $400 billion of incremental equity value created by the tech sector by 2029. Back when C was a $5 or even $15 billion public company, this probably seemed a little bit optimistic as well. But with C today and several others that have continued to grow in value as well, this is give or take about 50% done. Now, again, we want to emphasize that markets give and markets take. There is never a straight line from point A to point B in the stock market, but it is very encouraging to see that just 2 years into our 10-year prediction, things are already giving you a bit of a shape of what the next 8 years might look like. We had a very specific projection that about 70% of the winners would be regional platforms, what we call strategy 2. And about 30% would be Indonesia-focused platform, strategy 1, by and large intact over the last several years. If anything, we see glimmers on the horizon of a potential strategy 3, which would be a Vietnam primary business, perhaps even a Thailand primary or a Philippines primary business. Let's keep an eye on that together. We do think that there will be an increasing number of founders that will be coming from Vietnam, not the least of which is because a very large number of Vietnamese students are now going abroad. Now, they can get plenty good educations back at home in Vietnam, but the advantage of going abroad is the broadening of social networks and the broadening of perspectives, and often coming back with terrific entrepreneurial ideas. In fact, that journey of going abroad, often to America, and coming back was very much a part of the journey of C, of Grab, and of many others in Southeast Asia. We thought back in 2019 that there were about 1,200 recycled talents, if you will, alumni who had worked at the first generation of tech platform companies and were now founding or leading organizations. It turned out that we weren't looking hard enough. It's closer to 9,000 founders, co-founders, or CEOs here in Southeast Asia of companies who used to work for one of the established tech companies, often telcos or systems integrators like IBM and others, or the more recent tech companies like Sea, Grab, Gojek, Tokopedia, and others. This is actually a lot more exciting than we thought it was going to be. And finally, a bit of a prediction that we would have hoped over a long period of time would get solved, but is still very much in place, is that there is a Series CD gap in Southeast Asia. Now, from a commercial perspective at Asia Partners, we're very happy to be addressing that gap through the work that we do and the investment that we're all making personally into our fund. But it is something worth discussing. The challenge that many companies face in raising that capital here in Southeast Asia and really earning the fruits of their labor and the sweat of their brow as they eventually want to become public companies. This is still a gap, and one that over time will need to be fixed and addressed. Jumping into some of the details, this is a chart that we've really loved sharing with our friends over the years. It's what we sort of call the combination of Abraham Maslow's hierarchy of needs and Dmitry Mendelev's periodic table of the elements. We've updated it for 2021 from our early draft back in 2019. And what's really neat about this is you can see how China was built over a successive set of waves of entrepreneurship and eventual IPOs, which is what the timeline on this chart refers to. And as we've mentioned in previous years, we sense that Southeast Asia is following a similar trajectory. We would have said it was a 10-year gap in time between Southeast Asia and China. Witnessed the Sea IPO, which was the first really large e-commerce IPO from our region, exactly 10 years behind China's first e-commerce IPO in 2007. But you're starting to see situations where the gap is shrinking. Look at Grab's de-SPAC happening this year in December versus the DD IPO, which was a bit bumpier, happening earlier in the year. Definitely not a 10-year gap for those IPOs. But in broad brush terms, what's so exciting for us is the fact that this chart is still unwritten. There's so much of a story still to be told, and companies to go public to occupy the various niches on this grid. Now, 2021 has already seen some terrific IPOs that took place. One very large one on the Indonesian Stock Exchange, one fairly decent sized one on the New York Stock Exchange of a Singaporean company. And there are plenty more companies that are rumored to be, I think, considering this as well. And we've been thinking very hard about this at Asia Partners to go back to that drawing board and say, all right, where are all the empty spots? Where ought there to be bonsai category 3 businesses in Southeast Asia? And can we systematically go through a process of finding those businesses and bringing them over time to the public market? So we just encourage you to watch this space. There's some wonderful businesses in Southeast Asia. We're proud to be investors in 6 of them and helping them on their journeys. We hope eventually to all becoming public companies. One of the things that we wanted to highlight in this year's study, because we often hear this from well-intentioned, but perhaps not as to the ground observers of Southeast Asia, is where are the IPOs? I mean, Sea was a big one, and Buko was a big one, and Grab's going to be a big one, but is there depth to this market? One of the best ways of answering the question around market depth is to look at things on a power law distribution. Take the largest IPO over some period of time. We've arbitrarily picked the beginning of 2015 to the present day, and rank it number 1, and find the second biggest IPO, the third biggest IPO, and we just picked an arbitrary but material cutoff about $100 million. And look at that for every part of the world. Now, what we're doing over here is not looking at where the companies went public, we're looking at where they're from, where the companies are headquartered. And if you look at various parts of the world on this basis, you'll see that, of course, the United States is in fact the very largest cluster of IPOs, again, not the exchange, but where the companies are from, followed by China, followed by Western Europe. We think of these as the big 3. Then there's a bit of a gap, and keep in mind, this is a log chart to show a power law, so there's going to be a little bit of a spacing, which means a lot in terms of percentage terms and in absolute terms. And then you see Latin America as number 4, and then close on Latin America's heels, Southeast Asia. So we're coming out with a new prediction in our 2022 study. Southeast Asia and Latin America will flip spots on this list. It may take a very long time for Southeast Asia eventually to exceed Western Europe in its total IPO volume over a 5 or 6 year period of time. But mark our words, at some point in the next 5 to 10 years, the blue line of Southeast Asia will eventually cross over the Latin American line, and Southeast Asia will become the 4th largest part of the world in terms of IPOs. Some of those will be local, some of them will be on international exchanges like the Hong Kong Exchange, New York, or London, But the point still remains, Southeast Asia will become one of the world's largest clusters of IPOs. And in fact, it already is the fifth largest region for IPOs on a global basis. We talked in our 2019 report a little bit about what we call the Series C and D gap vis-a-vis China and vis-a-vis other parts of the world. And we're sad to tell you that today the gap still persists. In fact, there was a very, very short period of time, ironically, around the time we published our very first study back in the end of 2019, when the China curve and the Southeast Asia curve sort of crossed. And these are each indexed, each curve to the relative size of each economy. But today there remains a roughly 4 basis point of GDP gap between China and Southeast Asia. But what is worth emphasizing is that if you peel apart the blue line over here, the Southeast Asia line, what you see is if you bifurcate it into Indonesia, that's the darker dotted line, and then the rest of Southeast Asia, the light blue dotted line, what used to be actually a greater saturation of capital in non-Indonesia, Southeast Asia, Singapore, Malaysia, and so on, has now flipped. In fact, there is virtually no difference in capital supply between Indonesia in the growth equity segment versus China. That's that dark black line versus the blue dotted line over there. But there is now a 6 basis point difference between China, Indonesia, and non-Indonesia, Southeast Asia, which is really, really interesting. And while we applaud the amount of capital going into Indonesia to support great businesses and entrepreneurs there, we'd also note in passing that there's many different ways to build value in Southeast Asia, one of which is to build a company on a regional basis, what we call Strategy 2, often out of Singapore or KL, and then to go launch individual country operations. That's exactly what Garena and Shopee did and C Money did within C. It's what Grab did. It's what Red Doors and Carsome are doing. And we think many, many others like Dr. Anywhere, in addition to others, will follow down that exact same path. Finally, we'll share some really interesting work that we've done around how to analyze the growth of technology ecosystems over long periods of time. And one of the really startling things that came out for us as we studied how China and Korea and Southeast Asia and Japan and America and others evolved over time is that as GDP per capita advances over long and gradual periods of time, the ratio of tech market cap to GDP also rises. You can think of this as economies becoming more tech-centric and that value manifesting. In fact, if you think about it in a very holistic sort of way, there are 3 stages of development, with the Latin American continent being a little bit of an outlier to this journey. But as you think about where we are on this blue line right now, we are following so many of the similarities to China that China experienced over the last 10, 20, 30 years. In fact, that similarity, that remarkable similarity, gives us the perhaps temerity to think about making a forecast, which is by 2031, we believe that if Southeast Asia follows on the same trajectory that China did in a different moment in time, but again, gradually increasing affluence on a per capita basis, Southeast Asia ought to end up with about $1.2 trillion of total tech market cap. Now, a little bit of that will come from telcos getting bigger in Southeast Asia. A good chunk of that will come from hardware and semiconductor companies developing in Southeast Asia. The largest chunk will come from non-hardware, which is a bit of a broad category, but essentially means internet and software and other categories as well. As you sum all of this up, the future really is, we believe, very bright for Southeast Asia. Nothing ever happens in a straight line. Markets are frothy right now. You'll see some of those observations in the long form report. But in the meanwhile, we are always here to help or have a cup of tea if we can be of service to entrepreneurs here in Southeast Asia, to global investors, or to anyone else who'd like to be part of the wonderful ecosystem here based in Southeast Asia. Thank you all so much and have a very safe and healthy holiday season for those of you that are observing it. We'll hope to see you soon. Bye-bye.